Hey everyone, welcome back to the deep dive. We're going to be jumping into something pretty significant today. We're talking about the future of money, digital money, especially as we look ahead to 2025.
Yeah, and the listener has sent in some interesting stuff about two big, I guess you could say, contenders, right? The digital euro, which is still kind of in the works, and then this whole world of public blockchains.
Right, which we've talked about quite a bit on the show, but it seems like there are going to be some big decisions to make in the next couple of years about, how these two things might work together or maybe even compete. And that's what we're going to unpack in this deep dive.
Yeah, for sure. The sources you sent over, like the Hoken tech analysis about this digital euro project, and then also just the inherent way that public blockchains like, Bitcoin and Ethereum work, it really does lay out two pretty different ways of thinking about the future of currency. So that's what we're going to dive into.
So for the listener out there, our mission, if you will, in this deep dive is to really get beyond all the hype and all the buzzwords and understand how these things actually work. Right? What are the real benefits? What are the potential downsides?
Yeah, I think that's key because it's going to matter, increasingly so as things move more and more digital.
Yeah, absolutely. Okay, so let's dive right in. Let's start with this digital euro. Now, from what I understand, correct me if I'm wrong, this is essentially the European Central Bank's, the ECB's initiative to create basically a digital version of, the euros that we use every day.
Yeah, exactly. It's CBDC is kind of the shorthand for it, central bank digital currency. So, yeah, it's designed to work alongside, the physical euros.
Right, right. So, walk me through this. What's the main idea here? I mean, what are they trying to achieve? What's the point of the digital euro?
Okay, so the main goal, and they lay this out in the ECB progress report, is to offer a digital equivalent of what they call central bank money.
Central bank money. Okay.
Yeah, it's kind of a jargony term, but basically it's accessible to everyone in the euro area for all kinds of electronic transactions. So think, paying at shops, online purchases, even sending money to other people, peer to peer. It's kind of the idea is a public digital cash option.
Right. So it's like a digital version of cash, essentially. And the idea is that it would be, accessible and easy to use for just about everyone.
Yeah, exactly. That's a big emphasis, the accessibility of it. And, from what they're saying, basic use will be free and you can access it through, mobile apps, maybe even like physical cards,
Supercards. Wow.
which is interesting. But one thing that they're really highlighting is this potential for offline functionality.
Offline functionality. Wait, explain that. What does that even mean in the context of digital money?
Right. So that means even if you are in an area with, limited internet access or maybe no internet access at all, you can still potentially use this digital euro.
Okay, so that's really interesting. I mean, that really expands who could actually use it. Now, I think a really big question, right, on everyone's mind is privacy.
Yeah.
Whenever we talk about digital transactions, privacy is always a huge concern. So where does this digital euro stand on that?
Well, it's a big concern, and they know it's a big concern, so they're definitely addressing it. They're saying they're aiming for what they call cash-like privacy.
Cash-like privacy.
So the basic idea is that the ECB and the euro system, which is the, network of central banks in the euro area, they won't be able to directly link specific transactions to, individual users.
Okay.
But of course, the details about exactly how they're going to make sure that privacy is, upheld, that's all still being worked out. They're still in this preparation phase.
Okay, so it sounds like they're trying to make it as private as possible, but, it's still kind of in development.
Yeah, the specifics.
Yeah, the specific. Okay, so let's talk about, the practical side of things. How would this digital euro actually circulate? How would people get their hands on it?
Right. So the way they're thinking about it now is to use the existing financial infrastructure. So the banks that we use already, commercial banks, they would probably be the ones distributing this digital euro.
Okay, so it would be integrated into the current system.
Yeah, that's the idea for a smoother adoption process, right? It's not like a whole new system from scratch. And like you mentioned, they're in this preparation phase. Since November 2023, they're working on the rule book, doing user testing, research, all that stuff. But the big thing to remember is that they haven't actually decided for sure whether they're going to issue it. They're waiting for some EU legislation to be finalized.
Right, right. So it's not a done deal. It's not like it's going to happen for sure.
Not yet.
Not yet. Okay, so I think, for the listener out there who's thinking about this centralized approach, it definitely has this, potential for stability, right?
Yeah.
It's operating within a clear regulatory environment. It's kind of like the familiar financial system that we're used to, but just extended into the digital space.
Yeah, I think that's a good way to put it. It's like an evolution of what we already have.
Right, an evolution. Okay, so that's the digital euro. Now, let's shift gears completely and talk about this whole other world of public blockchains.
All right.
This is very different, right? I mean, very different approach.
Oh, yeah, completely different beast, so to speak.
Hmm.
Public blockchains, things like Bitcoin and Ethereum that we hear so much about, they represent a fundamentally different way of doing things.
Yeah.
Instead of having one central authority, calling all the shots, these are decentralized networks where every transaction is validated and recorded across a massive network of computers. And these computers are all over the place.
Right, and each one of these computers, we call them nodes, right?
Nodes, yeah. They're all kind of working together to verify every transaction. And that's the big thing. It's decentralized.
Decentralized, okay. So no single point of control. What are some of the other defining features then that come out of this decentralized structure?
Well, the fact that there's no central authority is huge, right?
Right.
It makes it really hard to censor. It also means that there's no single point of failure. Like if one computer on the network goes down, it doesn't stop the whole thing from working. Everything keeps going.
Okay, so it's resilient.
Resilient, that's the word. And then there's also this high degree of transparency.
Transparency, right.
All the transactions are recorded on a public ledger. That means anyone can view them. Now, they're usually associated with what they call these pseudonymous cryptographic addresses.
Yeah, I was going to ask you about that. So explain that a little bit more. What does that mean?
It's basically like a username that's not directly tied to your real-world identity, but they can be tracked.
Right.
So it's not completely anonymous, but it's also not, your name and address attached to every transaction.
Okay, so you can see the transactions, but not necessarily who's behind them. All right, so we've talked about this before on the show, but I think it's worth reiterating that, public blockchains have really evolved beyond just simple, digital payments. They're not just about, sending Bitcoin back and forth, right?
Oh, yeah, totally. And that's where things get really interesting. With Ethereum in particular, they have these things called smart contracts. These are like self-executing digital agreements. The terms are all coded into the software.
So it's like automated contracts.
Yeah, pretty much. And this has led to this whole world of DeFi, decentralized finance.
Right, DeFi.
They're basically trying to recreate traditional financial services, but in a decentralized way. And then there's NFTs, non-fungible tokens. This lets you own and trade unique digital assets. So it's really this whole ecosystem of applications that goes way beyond just sending money.
Okay, so it's a platform, almost like a platform for innovation. Now, I know we've talked about some challenges with public blockchains in the past.
Right, and they're not insignificant.
Yeah, what are some of the big ones that come to mind?
Well, one of the biggest is price volatility, especially with cryptocurrencies like Bitcoin. The value can go up and down so much.
Yeah, it can be a roller coaster.
Exactly. So for everyday transactions, that's not ideal. And then there are scalability issues. Some networks have had trouble processing a large number of transactions efficiently. They've made some upgrades, but it's still a work in progress.
Right, and then I know another big one, and this has been in the news a lot, is the energy consumption. Some of these blockchains, especially older ones like Bitcoin, they use a lot of energy to run, right?
Yeah, the proof of work consensus mechanism that they use requires a lot of computing power, and that translates to a lot of energy use. So that's a legitimate concern.
Yeah, definitely. Okay, so I think for the listener, the big takeaway here is that this decentralized model, it offers a lot of autonomy, right?
Oh, yeah.
It's a breeding ground for innovation. But it's also got these complexities and risks that are important to understand. Okay, so now let's get into the real nitty-gritty here. Digital euro versus public blockchains. What are the main points of comparison? How do they stack up against each other?
All right, let's break it down. So the most fundamental difference, and this kind of underpins everything else, is centralization versus decentralization.
Right, right.
Digital euro, centrally managed by the ECB. It's stable, operates within existing regulations. Public blockchains, no central authority, resistant to censorship, but yeah, maybe a little bit more regulatory uncertainty.
Okay, so that's a big one. Centralization versus decentralization. What about privacy? We touched on that earlier. How do they compare in terms of privacy?
So the digital euro is aiming for this, cash-like experience. And, the offline payments they're talking about, that's a good example.
Yeah.
The details of your transaction are basically only known to the people involved. Public blockchains offer privacy through, this pseudonymity thing.
Right, the pseudonymous addresses.
Yeah, but because all the transactions are recorded on this public ledger forever, it is possible with enough analysis, to link those addresses back to real people.
Right, so it's not foolproof.
Not foolproof. So both offer some privacy, but the way they do it is different, and the potential vulnerabilities are different.
Right, different approaches to privacy. Okay, so for just basic, reliability, stability, especially when we're talking about using it every day, how do they compare?
So for just, your average day-to-day transactions, the digital euro probably has a big advantage right now.
Yeah,
Because it's backed by the ECB, it's going to be stable. Public blockchains like Bitcoin, they're so volatile.
right. The price can fluctuate so much.
Yeah, fine for, some people, maybe as an investment or happening, but for buying your groceries, not so much.
Right. I don't want to go to the store and suddenly my Bitcoin's worth half as much as it was yesterday.
Exactly.
Okay, so stability, that's a big point for the digital euro. But what about, new applications, innovation? How do they compare on that front?
Well, that's where public blockchains really shine, right? The
Yeah.
digital euro seems to be mostly focused on payments. It's kind of narrow in scope, but public blockchains, they have these smart contracts,
Yeah.
and that's opened up this whole world of decentralized applications, lending, borrowing, NFTs. It's really an open environment for innovation.
Okay, so it's much more open-ended.
Yeah, much more.
Okay, so let's talk about access. Who can actually use these systems? Are they equally accessible to everyone?
Well, that's an interesting question. So, the digital euro is being designed for broad accessibility within the euro area. And with that offline functionality, they're trying to include people who don't have great internet access, which is cool.
Yeah, that is cool.
But public blockchains, they're globally accessible. Anyone with an internet connection can use them.
Right.
But there's a trick, but to really use them, you kind of need to understand how they work. Wallets, transaction fees, all that stuff. It can be a little intimidating.
Yeah, it can be a barrier to entry for some people. Okay, so last but not least, let's talk about the rules, the regulatory landscape. What are the rules? How does that differ between the two?
Well, the digital euro is going to operate within the EU regulatory framework. So compliance is pretty much built in. It's going to be very controlled. But that might also limit what they can do with it.
Right.
Public blockchains, on the other hand, they often operate outside of traditional regulations. So there's a lot more freedom, but there's also more legal uncertainty. Governments are still trying to figure out how to deal with them.
Right. It's the wild west out there.
A little bit, yeah.
Okay, so just to kind of summarize what we've talked about, we're looking at two very different approaches to digital money. The digital euro, centralized, stable, focus on privacy within the euro area, mostly about payments. And then public blockchains, decentralized, innovation, global reach, but also volatile and, operating outside of the traditional system. And I think it's important to point out that the Hoken Tech analysis that we were looking at, they mentioned this October 2025 timeframe for the digital euro, but even that's not set in stone.
Right. And, to be honest, I don't think we're going to see one system just take over completely.
Right.
It's more likely that they're going to coexist, right?
Yep.
And people will use whichever one fits their needs better.
Right. Different tools for different jobs.
Exactly.
Okay. So I think, hopefully this deep dive has given you, the listener, a better understanding of how these two systems work, the key differences between them.
Yeah, we've thrown a lot of information at you.
We have, but it's important stuff. I mean, this digital finance world is changing so rapidly.
It is.
And I think understanding the basics is going to be more and more important as we go forward.
Absolutely. And I think the real takeaway here, and this is something for you, the listener, to really think about, we're not just comparing technologies here, we're comparing philosophies.
Right.
How should our money work in the digital age? There are trade-offs to consider. Centralization versus decentralization, stability versus volatility, controlled innovation versus open innovation. So which model aligns better with your values, your needs? That's the big question. We can't answer that for you.
Right. That's the question you have to answer for yourself.
Exactly. Think about it.
All right. Well, on that note, that's going to do it for this deep dive. Thanks for listening, and we'll catch you next time.
See you then.